What's going on, everybody? It's Jeff here. Welcome back to the channel. Another bloody red day in the market. Yesterday gave us a little bit of hope as the S&P did end green, snapping its 5-day losing streak. I'm going to go over exactly what happened, why the market sold off, and exactly what happened to AMC dropping almost 10% today. So let's get right into it. First off, the SPY right here, 8:30 in the morning, monster green candle. The consumer price index was released and the numbers met expectations, actually beating June and July's 5.4%, very slightly at a 5.3%. The SPY held around that 448 level, and as soon as market opened, just sold off all day long. So why exactly did the market sell off when potentially seeing inflation numbers are down? And investors were a little bit, weary of believing the Fed, thinking that inflation was going to be transitory. Why did the market exactly sell off? Well, let's take a look at this. A weaker than expected CPI looked like it might provide some relief for markets, which are higher immediately after the reports released. However, investors said they continue to see signs that inflationary pressure will be more persistent than Fed officials or markets expect. We've talked about that. We've talked about the Fed basically packaging it up, this beautiful bouquet of just printed money, ignoring some bad signals, inflation and so forth, and packaging it up and trying to deliver, saying that everything's going to be okay, everything's going to be okay. And investors are really starting to say, how much further can you kick the can down the road? How much deeper can that hole can go before it's really not okay? Another issue that has happened is that the producer price index is rising faster than the consumer price index, and it suggests that companies haven't passed on all of their costs to consumers as of yet, meaning that even though the cost of goods have risen, they haven't risen high enough to where they should be, which means companies are selling products at a lower profit margin or potentially at a loss, which is only going to be temporary. Companies cannot run in negative margins or with smaller profit margins, as most of them are already pretty much set in stone and thin as it is, especially for some of these bigger companies that sell these consumer goods. So expect inflation to run even higher. That's exactly what was on investors' eyes, as well as, well, if inflation you say is getting better, we know the tapering is coming around the corner. Last thing I want to mention about the SPY is take a look at, I've looked at this numerous times, look for that 50 moving average to act as another sign of support. Don't go crazy on puts yet. If it solidly breaks that support, the next level is the 100 moving average. It had a little bit of a false breakout here in the beginning of March. However, if you look back at that, then once it breaks through that 50, it goes right down to the 100. So keep a very close eye on that. The entire market moves around the SPY. Now, let's take a look at a couple of the plays that we absolutely crushed it in today. The first one was Moderna. I love playing Moderna for the range. I talk about it all the time. All right, I said if it went above 425, expect this just to absolutely rip even higher. And today we got this, let me switch over, sorry, to this chart. Today we got this right at the open, and it just insanely ripped all the way up to about 443 as a high. One thing I want to talk about, which what happened yesterday to Moderna, is that there was I think it was a scientist that had said that citizens that are vaccinated individuals don't need the booster shot. It wasn't anything like saying that the FDA doesn't say it's necessary. It was just one scientist talking about it. It wasn't research or anything. And I thought this sell-off from almost 460 all the way down to 415, which is a little bit over, about a 10% sell-off, was a little bit dramatic. It hung around that 420 level. I looked pre-market, I scouted it out, and I said, listen, if it can get above this 425 level, which at the time the SPY had ripped at 830. If you look at where my time frame is at 8:30, the SPY ripped, but Moderna really it wasn't really benefiting from it. So I said, listen, at 425, it gets above this, it's going to go even higher, and it went all the way up to 443. I didn't catch this entire ride. I know some people caught it even longer than I did. That one was absolutely beautiful. It continues to be absolutely beautiful for us. The other one that I want to highlight was TMC. This one was a previous runner that people were talking about yesterday. I didn't get to play this yesterday. It just wasn't on my radar. Ripped up to 1539. I said if it got above that $13 level, expected to go all the way up about $1 to $1.50, and exactly hit that $14.50 level. I also went live today with everybody inside the group for about an hour to really explain these plays, where I come up with them, why I find, you know, the breaks, the rips above the supports, the rips above the resistance, the breaks below the supports, why they play an important role, and how to play these stocks today. So that one was really, really good. Let's take a look at AMC. We're going to go and look at the daily chart, the 1 minute daily chart. See this? See this? This actually is not AMC. This is IWM. Now let's take a look at the same chart. Exactly identical. AMC sold off with the Russell 2000 as it's weighed pretty heavily in there. We also know that all of the funds all the rebalancing, the funds that we talked about, if you watch my videos, you see me go over the Fintel filings, talk about the rebalancing. All of those funds were down today too. AMC was shorted today. I believe it was more of a retail short, a trader short, rather than a massive institutional add to the shorts. And the biggest reason for that too is look at the volume. 65 million shares, even less than what we've been talking about, the 75 million, the 82 million. There's not that massive amount of volume like it has been in the past to really make me feel like, all right, the institutions are adding to those massive short positions. So it still seems like they're kind of taking a step back. If you look at where they stand on the daily chart today, look at this nice little trend line. Yeah, it broke a little bit below this little trend line. We'll see where it opens up tomorrow. I talked about a healthy pullback. We had 1, 2, 3, 4, 5, 6. I believe even this was a green day too. It just had opened higher. You know, we had 7 green days in a row. A pullback is healthy. This was a little bit more than I wanted, definitely about that 8.5%, but it hasn't really broke that line yet. I was taking a look at the options chain, and I was quite surprised that, especially as going into monthlies, there are still I think it was a 70 to 30% call to put ratio. So I'd like to see exactly where that plays out. There is a lot of volume in the options chain going into this Friday. It is a monthly expiration. And if you look at some of the out of the money call options that are still open, I mean, 25,000 at 50, you've got 27,000, 38,000 at 60, and it just continues to go up. And then of course you have your YOLOs at 145, 84,000, which, you know, could be shorts trying to hide their position, or just, you know, retail and investors that are just trying to swing for the absolute fences. But another note on this one, the amount of open interest for all of these puts, just absolutely out of the money. 27, 24, 18, 13, 29, 12, 26, 11, 20, 27. So I expect if tomorrow the market still continues to stay down, I expect a massive, you know, attack trying to get below that $45 level. That'll cause a little bit of unwinding from the market makers as they can de-hedge some of their positions that they've hedged for. However, if the market continues to, you know, to bounce off of this and continues to move a little bit higher, then I would definitely expect that to continue to go. So we'll keep an eye open on the futures. I mean, I'm looking at the SPY right now. It is down, or actually I think it is up actually a tiny little bit, sitting on that 440.5 level. So we'll see exactly what happens. If you look at the 5-day chart, it has been choppy. It has been, you know, continue to be choppy, but it hasn't really broken above that 448 level. And we'll look like if we can get a bounce around that 443 level. So we'll continue to watch it. That's it for this video. I'll see you in the next one.